Hi everyone. Today we'll discuss Ind AS 103 business combination. If it is an acquisition of individual asset, apply PPE asset accounting. If it is a group of assets, fair value of allocation, purchase consideration. Uh, Otherwise, it will be acquisition of business Ind AS 103. uh, Transaction to constitute a business. Does the entity has control? Yes, Ind AS 103. No, Ind AS 28, Ind AS 111 applies. If no, apply PPE index. Business plus control, Ind AS 103. What is control? Uh, uh, Business combination is a transaction in which uh, uh, an entity has control of one or more businesses. Control plus business is Ind AS 103. Control as per Ind AS 110, uh, exposure to variable returns has the ability to affect those returns through power over the investor by transforming cash and cash equivalents, by incurring liabilities, by issuing equity shares, by providing more than one type of consideration. What is business? Integrated set of activities of assets capable of conducting and managed for the purpose of providing goods and services to customers, generating investment income, generating other income from ordinary activities. Inputs plus processes is equal to net ability to contribute to output. Input plus processes are must for output. May not be uh, revenue might not be there in case of new startup. Business is considered as a business. Inputs, non-current assets, employees, intangible assets, processes, strategic management process, operational process, presence of management process, output, dividend, interest, revenue. Part of it will be a business combination if inputs and processes are there and no output is there. Part of business is also considered for transfer. H limited it, is the business combination. S limited acquires the business. Inputs plus processes is equal to output. Process has to be substantive. What is substantive? If the answer to any of the questions is yes, then the process is acquired is substantive. If the answer to any of them is no, then the process is not substantive. Whether the process acquired is critical to convert input into output, whether the input acquired include workforce that has skill uh, uh, that has skill, knowledge, the experience to perform the acquired processes, whether the inputs acquired is uh, made up of IPR, in-process R&D, rights to obtain access to Nestle, marketing that has an organized workforce could experience into outputs in future. If the company has an output, then use any of the options. Acquired processes is critical plus employees. Then also substantive process acquired even if other inputs are not acquired. Uh, Option 2, acquired process is scarce and must be replaced without significant cost of effort in the ability to continue marketing a product outputs, whether the acquired process significantly contributes to produce output. CT Pharma acquires Vaccine Corp in research and development of various vaccines. Some of the key details in respect of operations are Vaccine Corp are as follows. Vaccine Corp does not have any completed vaccine. Vaccine Corp is engaged in the process of R&D, various activities including COVID-19 vaccine. Vaccine Corp has licensing of various vaccines. However, the entity has a pool of resources, scientists, uh, and staff to carry out R&D activities and clinical trials. Vaccine Corp has management staff with prolonged experience in biotics. However, it does not have any documented operational process or strategic management process. Uh, P&E of Vaccine Corp includes uh, corporate head events, research liability, an issue of equipment used in research process, whether CT Corp has acquired substantive process of Vaccine Corp. Answer: as employees and other inputs are acquired, hence substantive process is acquired. Optional concentration test: whether more than 90% of assets acquired in a single asset or group group of assets. No. Whether input and substantive processes required. Yes, it is a business combination. Apply Ind AS 103. If single assets or group of assets required, yes. And input and substantive processes required, no. Use asset acquisition. Acquisition method of accounting: identify the acquirer, determine the acquisition date, determine the fair value of consideration, identify and measure identifiable net assets, measure NCI of the acquiree, determine goodwill or bargain purchase, recognize any measurement period adjustment, identify the acquirer, H limited, S limited, uh, the date of acquisition, H limited and S limited. In the case of ICICI Limited, the legal acquirer and legal acquiree were different than the accounting acquirer and accounting acquiree. It is quite probable that the legal acquirer and legal acquiree may be different from accounting acquirer and accounting acquiree. Determine the acquisition date. Some draft guidelines. Uh, uh, on 1/4 and on 36, shareholder approval is obtained. On 39, terms and BOD is appointed. On 31/12, regulatory approval of SEBI is obtained. If the approval of SEBI is mandatory for the company to exist, then the date on which SEBI approval is given is the date of acquisition. Uh, Potential indicators when the control is acquired, date on which acquisition is commences, date of majority of board of directors are appointed, date of flow of economic activity, and date of clearance by regulatory authorities. Example: CT Corp acquires 80% interest. Uh, as per shareholders agreement 1st April 2019, date of shareholder agreement 1st June 2019, date of obtaining control over the board representation 15 July 2019, date of payment of purchase consideration 15 July 2019, date of transfer of shares 1st August 2019. So, date of obtaining control over the board 1st July 2019 will be the date of acquisition. City Corp agrees to acquire ABSPL in the all equity deal. As per binding agreement, City Corp will get effective control of ABSPL on 1st April 2019. However, purchase consideration will be paid only when shareholder approval is received. The shareholder meeting is scheduled to happen on 30th April 2019. If shareholder approval is not received for the issue of equity shares, then purchase consideration will be settled in cash. So, in this case, shareholder approval is not mandatory to for the company to exist. Hence, the date of binding agreement would be the date of acquisition, that is 1st April 2019. City Corp and ABSPL are dominant traders in South India. On 1st June 2014, ABSPL makes a bid. City Corp and other for terms of acquisition. Purchase price and is received thereafter. CCI approval, Competition Commission of India approval is mandatory for the contract to exist. So in this case, the date of CCI approval would be the date of acquisition as it is mandatory for the company to exist. Identify and measure fair value of consideration, fair value of assets, fair value of liabilities, fair value of equity instruments, plus fair value of contingent uh, consideration. Uh, if your next year profit is 20 crore, then additional 5 crore purchase consideration, it is a contingent consideration. So 120, if the purchase consideration is 120, plus contingent consideration of 5 crore would be there. Any changes to the contingent consideration post the date of acquisition would go to P&L, that is FVTPL. Treatment of transactions not forming part of business combination. H Limited gave license to S Limited, 10-year license, 4-year expired, 6-year left. 6-year license is called reacquired rights. Uh, Reacquired rights. So reimbursement of acquisition consideration. Then remuneration to former owners 30, the acquired rights 5. So 120 minus 45 would be 85 would be the purchase consideration. On 1st April 2014, CT Corp agreed that the shareholders of ABSPL to acquire 100% stake in ABSPL for a total consideration of 100 crore. CT Corp buys 2 crore as transaction cost for of ABSPL. Two of shareholders will agree to be general managers for 1 million for 3 years each. ABSPL had filed a legal case, and the cost of settling the same would be 2 million. Total consideration 100 crores minus owner's consideration for future services 2 into 1 into 3, that is 6 million. Settlement of legal case 2 million. So net purchase consideration would be 90 million. Pre-existing reacquired rights, pre-existing relationship of lawsuits, lease agreements, supply agreements, receivables, payments, pre-existing contractual relationship minus reacquired rights. How to determine gain or loss on reacquired rights? Lower of market price minus carrying value in the books, or penalty amount for cancellation. Lower of the two would be the cost of the required rights to be deducted from purchase consideration. Example for this is on 1st April 2019, CT Corp acquired ABSPL for a purchase consideration of 50 lakhs. In the past, CT Corp has granted ABSPL a 10-year license, and the license has 6-year balance life. The cost of license was 2.5 lakhs. The contract allowed either party to terminate the contract at a balance of life plus 20%. On the date of acquisition, the settlement works out to be 1.8 crores, 1.8 lakhs. That is 2.5 into 6 divided by 10 plus 20%. Uh, City Corp calculates the current market price is 4.5 lakhs. So step 1, market price 4.5 lakhs minus 2.5 into 6 divided by 10, that is the cost of the acquired rights, and expired life of rights. So that will be 4.5 minus 1.5, that will be 3. And penalty for settlement would be 2.5 into 6 divided by 10 divided plus 20%, that is 1.8. Lower of the two is 1.8. Hence, purchase consideration would be 50 crores minus unexpired life, that is 1.8 crores. So 48.2 crores would be the purchase consideration. Identifiable net assets, what to recognize? Identifiable assets, identifiable liabilities, NCI. Intangible Intangible assets, non-cancelable long-term contracts with customers, hence could be recognized. Goodwill and estimated is already in the books, will not be recorded. Uh, Classification of assets, PP1, PP2. Exception to recognition. Exceptions, contingent liability, measurement exception, reacquired rights, share-based payment, asset held for sale, recognition and measurement exception, detail exploration benefits, indemnification assets, ROU assets and liabilities. Indemnification assets. debtors 100, S limited 90% reliable, 10% bad debts, H limited 50% reliable, 50% bad debts, S limited any guarantee for short recovery of debtors to H limited is called indemnification assets. So H limited, the bad debts as per H limited would be 50, but there would be an indemnification assets of 40%. So 40 would be indemnification assets which will be carried in the books. CT Corp Corp acquired ABSPL. At the time of acquisition, ABSPL has a pending court case which it has sued for damages of 200 lakhs. ABSPL assumes that the contingent liability would be 70 lakhs on the date of acquisition, and it appoints indemnification assets also. On the date of acquisition, indemnification assets would be 70 lakhs and indemnification liability and contingent liability would be 70 lakhs. So there'll be no impact on goodwill. ABSPL acquires 75% of CT Corp for a cash consideration of 175 crore. Accordingly, fair value of CT Corp's net identifiable assets will be 150 crores, 75% of 200 crores, that is 150 crore. If fair value of NCI is given at 60 crore, calculate NCI at fair value and proportionate cost method. At fair value, uh, the net identifiable assets is 200, account debit uh, to NCI. Fair value of NCI is 60 crores to 60 crores to purchase consideration 175 crore. Goodwill will be balancing figure that is debit 35 crore. In proportionate cost method, NCI would be 200 into 25%, that is 50 crore. Net identifiable assets 200 crore. To NCI 50 crores. To purchase consideration 175 crore. And goodwill will be balancing figure, that is 25 crores. Uh, Measurement period adjustment on 15 3 2022, the business combination happened, and 15 days are not enough to prepare the books for the business combination. Hence, there is a 1 year window and do provisional accounting for 15 days and revise the numbers up to 1 year, that is 15 3 2023. This is known as measurement period adjustment. Thank you. This brings us to the end of the session. Please do like, subscribe the channel. Thank you so much.